Oh, that's real good.
Hello everyone, and welcome to our channel Penny Lesson. We talk about everything finance, from tips on making money and proper investing to news about the different economies and situations affecting the global markets. The goal of this channel is not only to teach you how to be more financially responsible but also to teach you how to be more aware of global events. So why not just sit back and relax while we tell you what's happening in the finance sphere? Be sure to subscribe to my channel and hit the notification bell to be constantly updated on my latest videos. Remember, one penny lesson a day keeps being penny less away. Since housing costs rose annually, most Chinese residents could no longer buy a home or apartment in Beijing or Shanghai, buy a house near cities, yet far enough away to obtain a decent deal. Many did. People began moving 10 to 15 kilometers outside Chinese cities. Rising prices for property near cities encouraged individuals to migrate further away from them. Developers built residences outside the city because they expected expansion to continue. After 20 years of growth, China's real estate sector is worth $50 trillion, double the US GDP and nearly 4 times China's. Real estate accounts for 70% of China's wealth, according to Loomis Sales. Chinese people save for years to buy real estate. Even after years of saving, many who live near cities will need mortgages since housing expenses are so high compared to income. Rising property values induce fear of losing out, which leads people to take on dangerous debt. China has 4 of the 10 most expensive cities for home buying. Such praise won't endure forever. China is showing signs similar to the US during the 2008 crisis. China's housing bubble is deflating. Since the price of homes in China keeps growing, developers have done everything they can to expand their portfolios. Greed grabbed center stage, and developers quickly couldn't pay off their loan. Evergrande was one of these developers. Evergrande is a major developer. Evergrande used corporate borrowing to enhance its development land to 565 million square meters. Evergrande's $300 billion loan made this possible. Evergrande thrived due to its access to money. Evergrande is the world's most valuable real estate company. Investors immediately realized Evergrande was in trouble, changing their earlier positive tone. Evergrande defaulted after missing a $260 million interest payment. Due to Evergrande's falling bond prices, the credit uproar has been huge. International bond holders are considering legal action over Evergrande's financial woes. President Xi Jinping's tough penalties on China's real estate business are a factor. President Xi wants to reduce China's real estate reliance by curbing speculation. Xi's motto is "Homes are for living, not speculating." President Xi's policies threaten China's economy. Evergrande is one of several defaulting developers, despite its size. Chinese real estate developers are vanishing. Chinese real estate developers know it's not the best time to invest. In December 2021, contracted sales for the top 100 real estate developers fell 35%. According to Cathie Wood, it was the first time in more than 20 years when development enterprises lost money. Even the Federal Reserve is concerned that China's housing boom may hurt the U.S. economy. The Fed cited China's government and local debt to back its claim that stresses in China's real estate market may affect the financial system, with possible spillovers to the U.S. Analysts say China's GDP growth rate reflects economic health. A large part of China's economic expansion was due to a debt bubble, not just in real estate. China's household debt has grown compared to income and GDP during the previous 2 decades. Household debt exceeds GDP. China's GDP is growing quickly, but so is its debt. China's overall debt as a percentage of GDP is almost as high as wealthy nations. Imagine China with a debt-to-GDP ratio similar to Western nations. Overextending will hurt. The Fed also referenced real estate prices in the Chinese Communist Party's crackdowns. The Chinese government's 3 red lines in real estate limit developers' borrowing. Liability to asset ratio below 70%. net debt to equity ratio below 100%, and cash to short-term debt ratio of 1. Businesses that meet these standards can increase their debt by 5% per red line. The administration should have established this policy years ago. Cathie Wood likened CCP's proposed laws to playing with fire because they could destroy the real estate business. Overworked developers will be hard to refocus. 2/3 of China's top 30 developers have broken rules. Developers can't minimize their commitments suddenly with these 3 lines. Many developers are selling real estate to make ends meet. Evergrande and Caissa are selling their assets. Evergrande is selling the Evergrande Tower in Hong Kong. The property hasn't been bought. Caissa Group Holdings' 18 projects total 4.7 million square feet. Caissa hasn't sold any of these projects, like Evergrande. All these for-sale houses lack potential buyers. Real estate development accounts for 29% of China's GDP. Imagine the GDP if this industry failed. The Federal Reserve said that while the Chinese slowdown won't touch Chinese people directly, it may harm everyone. If Chinese real estate dropped, the global economy would suffer. China's economic slowdown may pressure global financial markets by deteriorating risk sentiment, threaten global economic growth, and harm the U.S. China is the world's top supplier of almost everything. China produced 28% of the world's industrial output in 2019. China may seem too large to fail, but economic slowdowns are common. The 1989 Japanese real estate crash is comparable to the current one in China. Japan was the 1980s leading developing economy. Japan will supplant the U.S. as the world superpower, say economists. According to news sources, U.S. land values are 4 times lower than Japan's. Other nations saw Japan's 3.89% annual GDP growth in the 1980s. Japan's economic growth led to a debt crisis. Japan's corporate borrowing rose after the finance ministry encouraged it, like in China. The finance ministry promoted low interest rates, deregulation, and domestic stimulants that increased money supply by 8 to 10 annually. Japan's GDP and prices climbed steadily, but its economy plummeted even faster. By 1992, the Japanese stock market was at 15,900. The Nikkei index sank 45% over the next 20 years after falling 60% initially. Because stock values took so long to rebound, it's called the lost decades. Cathie Wood says China's situation is similar. Chinese real estate prices are rising due to rising debt. China's possible implosion will be deflationary. China's shaky economy will force commodity prices to plummet. Future crashes could be devastating. Cathie is confused because commodities haven't fallen substantially. Although consumer confidence is still high and may be deceived by food prices, it often leads to reduced commodities prices. Cathie predicted the Chinese economy will stall in 3 to 6 months in ARK Invest's quarterly report. Cathie said, "If we're right, the market will focus on the potential of a U.S. recession, the considerable slowdown in the Chinese and emerging market economies, and perhaps an unexpected decrease in inflation within the next 3 to 6 months. The Baltic Freight Dry Index has decreased by more than 40%, drum prices by 25%, and U.S. lumber prices by 33%. Even with the WTI oil price, a noticeable outlier has dropped 12%. After realizing China's economy is deteriorating, the Communist Party took action to prevent a crash. China's central bank slashed interest rates to boost the economy. Jerome Powell, who wants to hike rates swiftly, disagrees. China's real estate business is in trouble and will likely get worse. Predicts a 10% drop in home sales in 2022 due to tighter financing and rules. The recession will affect you wherever you watch this film. That being said, let me know what you think about China down below. Do you agree with Cathie Wood? Let me know in the comments below. Wow, was that news? Why not ponder it? Want to know the latest? Comment if you want more articles like this. This video is just one of many videos on my channel that brings you the latest news about the world of global finance and economics. So go hit that subscribe button if you don't miss out on content like these. If you enjoyed this video, please hit the like button. Thank you for all your support, and I'll see you again next time. Remember, one penny lesson a day keeps being penniless away. Cheers.